Hello. You're watching Money 9 Live और मैं हूं Krishnakumar. Make sure you subscribe to our YouTube channel. Also follow us across all social media platforms, Facebook, Instagram, LinkedIn with the handle at Money 9 Live. Also log on to money9live.com for all the latest from the world of personal finance. Today, on a very special edition of Money Masterclass, we are being joined by portfolio manager and author of the best-selling book, The Joy of Compounding, Mr. Gautam Baid, all the way from Salt Lake City in Utah in the US. Gautam, thank you so much for being with us here on this very special edition of Money Masterclass. I want to begin by asking a very simple question. Do you think Indian investors are finally waking up to the joys of compounding? Because, the number of demat accounts that have opened, the number of investments that have gone into mutual funds in the recent past are all pointing to the direction where Indian investors seem to have finally discovered the joys of compounding. What's your take?
Hi Krishna, thanks for having me on your show. Well, there is a lot of recency bias at play here because the Indian markets have gone up a lot over the last 1 year. And it is very important to realize that investing success is very challenging and difficult over a long time horizon. A bull market or two in between just fools many new market participants into thinking otherwise. And the power of compounding is backloaded. And the joys of compounding are truly felt only over the very long run. Decades, not just a few months or a few years. Achieving a CAGR of 100% for a few years of a bull market is commendable. But achieving a CAGR of 20% for more than 60 years is what makes a Warren Buffett. He played the game for the longest time and he became the biggest winner. Investors should enjoy the current good times, but they should always keep in mind that they need to stay the course during future bear markets. That is how wealth is created in the long run.
Right, Gautam, tell us simply about what you've been talking about, which is the power of compounding. How can Indians get motivated? Considering the fact that they, at best can invest very small sums of money. How can they be motivated that all that small sums of money through the power of compounding will grow into a large corpus?
Well, in my book, I've talked about the journey to the first million, and the fact of the matter is that it is not the first million that is the hardest. It is the fact that you need to get started. The first dollar is the most toughest. The most difficult part is getting started. An average Indian can become a rupee billionaire, or what we call Arabpati in Hindi, with a starting capital of as low as 1 lakh rupees. At 26% CAGR, 1 lakh becomes 10 lakh in 10 years, 1 crore in 20 years, 10 crores in 30 years, and 100 crores in 40 years. So I believe this example would motivate a lot of your audience to start investing early, because the key to compounding is time.
Very well put. I also wanted to ask you, when it comes to investing into equities and stock markets, you live in Salt Lake City in Utah in the US, based out of there. Tell us, what has the West done differently? Because there, the culture of investing into stocks and equities and related products, financial products, is very well seated, but not that much so in India. Where did India go wrong, or where did the West get it right?
So the basic fabric of the two nations is very different. America has been always a capitalist economy, whereas India has always tried to move forward very cautiously in trying to strike a fine balance between capitalism and socialism. As of April 2021, 41% of all US households' financial assets and savings were in stocks. Although a small percentage of US households invest in stocks directly, but a large proportion of them, more than 52%, have some level of investment in the US stock market, and which is primarily in the form of tax-efficient retirement accounts known as 401ks. And Indians also, as you know, we love tax incentives, tax-saving incentives, and the Indian government can greatly boost the equity culture in the country by giving tax benefits and tax breaks to equity savings in the retirement account of individuals. So that is one way to go forward.
Right now, the markets at this stage are valued at $3 trillion, and going further up. Talk to us about the sectors, themes, products that you're bullish on, when it comes to, advising the Indian retail investors. I'm not talking about the HNIs, that you usually advise. I'm talking about your, view for the average Indian stock market investor.
So as the saying goes, there is always a bull market going on at all points of time in some sectors of the stock market. And as investors, those are the areas we need to focus our time and attention on. So consumer electronics, manufacturing outsourcing, CRAMS, CDMOs, animal healthcare, cloud computing, complex APIs, specialty chemicals, home improvement, building material products, and auto ancillary and import substitution plays, which have already completed large capex. Those are some of the many promising thematic opportunities available in the Indian stock market right now. And the stock market is a never-ending stream of opportunities. All that we need to do is keep our eyes and ears open, and opportunities will come.
So, when it comes to, again, I'm talking about the average stock market investor in India who's watching this, should these investors go for the all important quote unquote value buying in stock markets, or go in for their own DIY research in terms of mathematical or statistical models like momentum and quant investing? What would your ideal solution be, or ideal advice be to Indian retail investors?
That's a very good question, Krishna. And one of the biggest learnings as a stock market participant over the years is to begin to understand and respect the different investing and trading styles. The two styles that you mentioned, value investing and momentum investing, both the styles are different, but the end objective is the same: good returns with control risk, right? So in case of value buying, you control the risk through the price you pay. And in case of momentum investing, risk management practices include a trailing stop loss from the peak, or the breach of an important moving average like the 21-day moving average, or the 50-day moving average, or the all-important 200-day moving average. An investor can also practice techno-fund investing, which blends the best practices from both these different styles of investing. So there are different ways to invest successfully, and there are multiple pathways to heaven in the stock market. All important thing is that you follow the method that suits your personality, your personal temperament, and your nature the best. That is the ultimate route to success in the stock market.
Fair enough. Talk about temperament and your personality, etc., etc. I'm going to, go on a little bit of a tangent over here, but stick with this idea of investing in things that can go up and down like stocks. I'm obviously referring to cryptocurrencies. Gautam, talk to us. What is your view on cryptocurrencies? We've heard so much being said. One is the complete surge that we've witnessed, and then you see the crash, and then you see the surge all over again. And there's so many people talking about the fact that, you need to take risks at the end of the day in any financial investment to make money. So what is wrong in investing in going for crypto? So I want to know your take of somebody who, who's giving so much advice on investing in equities, which involves so much risk. How do you view cryptocurrencies or investing in cryptocurrencies?
Well, I believe in the underlying technology of crypto, which is the blockchain technology, and I believe it has its merits and it has a very promising future ahead. I do not know how to invest in cryptos for the long term because they do not produce any cash flow. But when you have many of the world's brightest minds backing a particular asset class, then it is not wise to bet against it or dismiss it completely. Now, crypto prices are a function of supply and demand, and very profitable trading in cryptos can take place if one practices the appropriate risk management and good technical analysis principles. And it is not at all a problem to have a very small percentage of your entire portfolio, probably 2 or 3% in cryptos, because you want to expose yourself to these positive black swan events as well as an investor.
All right, let's get back to stock markets then, and stocks. Tell us your view on small case. Do you think small case is emerging as a serious threat to mutual funds and portfolio management per se? Your take on small case.
So as we all know, many retail investors in India have become disenchanted with mutual funds because of their poor returns performance over the last decade. A lot of the large cap mutual funds in particular have become closet indexers and have struggled to generate alpha. And that is the reason many investors have gravitated towards small cases. Curated by SEBI registered investment advisors and research analysts, A small case offers investors a ready-made model portfolio in exchange for a subscription fee. Combine that with a very friendly user interface and the facility for real-time monitoring of portfolios, and it is pretty clear why first-time investors are finding small cases to be a better option than mutual funds. Also, unlike a portfolio management service, a small case does not need a minimum ticket size of 50 lakh rupees. Fintech is the future, and small case is clearly the front runner here in the Indian market context. Very promising times ahead of it.
Very promising times ahead for small case is the word coming in from Gautam. Gautam, I'm going to move away from stocks and small case and move on to another asset class, which is gold. What's your view on the gold prices at this stage? Do you think it should feature prominently in the Indian investors' portfolio? And if it needs to feature in the Indian investors' portfolio, should it be sovereign gold bonds or gold ETFs? What would be your choice?
So gold prices have given good returns. Gold has given good returns to investors in India over the years on the back of rupee depreciation against the dollar. And for the average investor, it is fine to have a small allocation to gold, around 5 to 10%. Now, about those two investment options you mentioned, sovereign gold bond and a gold ETF, both of them are relevant to two different types of investors. For the investor who wants to have a short-term investment in gold and primary focuses on liquidity, you should opt for the gold ETF because it enables easy entry and exit. But for long-term investors in gold, a sovereign gold bond is clearly much more superior because it offers multiple benefits. It offers 2.5% per annum, a short return. It offers the benefits of gold price appreciation, and you get full income tax exemption on the maturity amount if held for 8 years or more. So both gold ETF and sovereign gold bonds are meant for different kinds of investors depending on their individual time horizons.
And quickly, your take on all this digital gold buying, which seems to have picked up in the recent past, especially over the last year or so. How do you view, digital gold products?
So when you say digital gold, the first thing that comes to our mind is Bitcoin. And what is happening is, see, the biggest
No. Clearly, beg your pardon. I wasn't referring to Bitcoin as as a euphemism for Bitcoin, the digital gold. What I meant to ask was the basic fundamental idea of buying gold in different forms from the traditional ideas of buying gold that the Indians have been having for so many centuries.
So that is clearly the option of choice for all the millennials. The entire world is going digital, and traditionally, our parents and grandparents, they used to prefer physical gold. But for the new generation, they have a clear preference for digital gold because of the various benefits it offers. For example, there's no maintenance cost, no storage costs. And there are other benefits of being able to track it real time digitally. So it's like the name says it all. It's digital. So it's meant for the new generation millennials.
But you're saying at the end of the day, you're buying gold, so hardly matters. So whatever is convenient to you, you should go ahead with that form.
Absolutely. It's all about ease and convenience. Once you have ease and convenience in any particular product, mass adoption becomes very, very easy.
Right. And I'm asking about gold simply because you're talking about an extremely uncertain time, talking about a high volatility, even in the stock markets. So, in this, sort of post-pandemic world that we're approaching, gold still makes an important case for investment. At least 10% of a investor's portfolio is what you're saying, right?
Sure. Around 5 to 10% for the average investor is fine. But if you have a little bit of expertise, like for any investor with a little bit more expertise, I would recommend a more leveraged way to play rising gold prices. So you should buy a very high quality gold financer. In India, you have two options, Muthoot Finance and Manappuram Finance. But Muthoot Finance is more of a pure play gold finance company with more than 90% of its loan book in gold loans. Whereas Manappuram Finance also has the housing finance and microfinance subsidiaries, which constitute a large part of their AUM. So if you want to play a leverage bet on gold prices, if you're bullish on gold, I would recommend investing in Muthoot Finance instead of buying just plain pure gold.
All right, then that's as far as gold is concerned. I want now, Gautam, you to give the Indian investors who are at the cusp of taking their first baby steps into investing, into stocks and stock markets. Talk to us, your advice. And if you can, अगर हिंदी में बता सकते हैं तो बहुत अच्छा होगा. क्या सलाह देना चाहेंगे ये पहली बार जो इन्वेस्ट करने जा रहे हैं इंडियन इन्वेस्टर्स को?
अगर जब भी आप कोई बिजनेस का शेयर खरीदते हैं तब आप उस बिजनेस के मुनाफे में हिस्सेदार बन जाते हैं। अच्छे कंपनियों के शेयर में लंबी अवधि के लिए निवेश करें।
So basically you're saying that pick the right company, अच्छे कंपनी चुन लीजिए और लंबे समय तक निवेश करके रहिएगा, यही सलाह होगी आपकी।
Exactly. Think like a business owner. When you're buying a stock, you're buying a piece of a business. The moment you start thinking from that perspective, everything changes. You become more long-term oriented. You start focusing on the variables that truly matter. And that is how you gain success as an investor over time.
All right, we will leave it at that. Mr. Gautam Baid, Gautam, thank you so much for being with us. Mr. Gautam Baid, the portfolio manager and the author of the best-selling book, The Joy of Compounding, joining us here on Money 9 Money Masterclass, straight from Salt Lake City, Utah, in the United States of America. Gautam, once again, thank you so much for being with us here on Money Masterclass, and we hope to keep seeing you here again on the channel. And with that, it's a wrap here on this edition of Money Masterclass. Thank you so much for watching. This is Krishnakumar saying Alvida.